One key decision by Robinhood made 2 years ago is now being seen as that first domino that triggered the platform to restrict trading. Kate Rooney joins us on this. And Kate, this is wonky, but it needs to be broken down because this is such an important part of the story.
That's right, Deirdre. This is key. I talked to a ton of analysts and even some early Robinhood investors last night who say the decision in 2018 by Robinhood to get rid of a middleman, so they now clear and custody trades in-house, is really the crux of what's happening this week. It kicked off Robinhood's needing to restrict those trades of GameStop. So going back to 2018, this was a major investment. It was really seen as a money saver at the time. Vlad Tenev told me back in 2018 that this would help them expand quickly. He likened it to Apple deciding to build its own chips or Amazon investing in fulfillment centers. So instead of relying on a third party like most of those fintechs do, so think of Square, who use a middleman and another clearinghouse, Robinhood instead settles and clears customer trades. They provide custody for assets, and that in turn gives them a bigger slice of the revenue behind trading. But it also raises the bar for how much money Robinhood needs to have in-house to meet those capital requirements. They need to send cash every day to the Depository Trust Company, also known as the DTC, and that can really change on a dime based on trading volumes. I'm told that the DTC increased the amount that firms needed for margin calls, especially on GameStop. Robinhood, of course, told CNBC repeatedly that this was not a liquidity issue and these moves were preemptive. But remember, Robinhood raised $1 billion this morning from some existing investors. You had Sequoia and Ribbit in there. They had to tap their banks for a line of credit and told some customers that they might need to close some of those at-risk positions. Robinhood, of course, yesterday getting accused of sort of changing the game, changing the rules in the middle of the match. But if you think about it, these are really the rules of the game. Robinhood has to comply with its regulators. It is the same thing that happens all the time at Schwab and Fidelity, who also clear trades in-house. What really complicates this, though, for Robinhood is that viral social investing. Robinhood really has been the face of it. People are piling into the same stocks, and they're using a lot of leverage.
Shepard Smith here. Thanks for watching CNBC on YouTube.